All right, so you sent me that chart last night. We were just talking about just these previous bull markets and how this one compares. We're going to show the chart once again. Give us a sense. How does this bull market compare to those other ones that we've seen since 2000? I know you had some other, but there was just going to be too many lines on the chart for us to really get a good look. But right now, we're seeing that orange one, that's 2009. Right now, obviously, we're looking since 2022. How does this one compare?
Frank, this is still a fairly young bull market coming off of those October 22 lows. And if you go back and just look at history, the median length of these bull markets in terms of trading days has been around 979 days. Right now, we're only about 504 days. So from our perspective, if, again, the phrase you used, if history is at all sort of rhymes to what we've seen in the past, there's probably more room for this bull market to continue to work its way higher in here. And again, you just look at the composition of what's been driving this market. It's a lot broader, Frank, than what a lot of investors think. It's not just the Mag 7 over the last 2 years that has driven this this market higher.
You know, Craig, you're not just talking about it. You're actually putting your money where your mouth is, metaphorically. You're actually raising your S&P price target today right here on Worldwide Exchange. Prior was 5,800. Now it's at 6,100. Also, for next year, you're putting out your 2025 S&P price target. That's 6,600. So you're saying it's not just the Mag 7. They report next week. We're going to talk about those later with a guest later in the show. But if it's not just the Mag 7, what pushes us to your new S&P price target of 6,100?
Frank, I think it's going to be a broadening out of this market even further than what we've been seeing. Financials are starting to re-engage with the Fed rate cut that we've seen, the normalization of the yield curve. Those will certainly be helpful. The industrial sector continues to do well as we continue to see a reshoring effort happening here in the United States. And then again, you come through and you look at technology. It's beyond the Mag 7. You've even got stocks in here. Royal Caribbean has been a terrific winner over the last 2 years. You look at the home builders, you look at Lowe's. There's been a lot of names. And Frank, you know, we even added a bunch of new names into the portfolio that we run. Stocks like Toast or Marvell or Corning or United Natural Foods. These are all terrific looking charts that continue to work their way higher in here.
All right, so I want to ask you about these additions. These are additions to the Piper Sandler Technical Opportunities portfolio. Is this simply just based on the chart, or are there some trends that you're seeing? I mean, it's a pretty wide variety of stocks here. Toast is like restaurant tech. Scott's Miracle Grow is obviously, equipment and fertilizer and things like that. Marvell is a chip maker. What are you seeing here? Is there a commonality in these names, or are there particular stories for each one?
Well, I think there's particular stories for each one, but what we try to ultimately do with this portfolio is we're focused on trend, relative strength, momentum, and again, we run this as a diversified portfolio. So we will make some slight sector overweights and underweight bets in the portfolio, but for the most part, we're trying to find those sort of bottoms-up, constructive-looking trends and themes. And again, there's just these constructive, not only earnings growth, but also trend and momentum with these names, Frank.
All right.